Strains between the United States and Japan, two allies, have deepened due to two major events undermining their relationship. The first is Japan's gradual reduction of its U.S. Treasury holdings to diversify investments and reduce reliance on U.S. debt. This move potentially raises U.S. borrowing costs and disrupts financial markets. The second issue is the U.S. administration's decision to block a Japanese company from acquiring U.S. steel, citing national security. Japan views this decision as politically driven and protectionist, which has damaged economic ties and led Japan to sue the U.S. The decision has raised concerns about shifting from cooperative trade relations to a more protectionist stance. These events expose tensions in the U.S.-Japan alliance, raising uncertainty about their future partnership and signaling a shift in global economic diplomacy as Japan seeks to safeguard its interests amid unpredictable U.S. policies. Over the past decade, not only Japan but also China has significantly reduced its holdings of U.S. Treasury securities, reflecting shifts in their foreign exchange reserve management and broader economic strategies. In 2013, China held approximately $1.27 trillion in U.S. Treasury securities. By November 2024, this figure had decreased to $768 billion. Similarly, Japan's holdings have declined over the same period. In 2013, Japan held around $1.2 trillion in U.S. Treasuries. By November 2024, this had decreased to $1.986 trillion, representing a reduction of approximately $11.2 billion, or about 8.4%. Japan and China have been leaning toward cooperation rather than hostility over the past few months. During a meeting in Beijing, Japanese Foreign Minister Tessie Iwaa and Chinese Foreign Minister Wang Yi agreed to initiate talks on security matters. They plan for Wang Yi to visit Japan in 2025 for a high-level economic dialogue focusing on environmental energy conservation and healthcare cooperation. Both sides emphasized the importance of maintaining open communication to manage regional security concerns, including territorial disputes and military activities in the East China Sea. To enhance people-to-people exchanges, Japan announced the relaxation of visa requirements for Chinese visitors, including extending the duration of stay for group tours and increasing the validity of multiple-entry tourist visas. This decision reciprocates China's earlier expansion of visa-free access for Japanese citizens. The two countries also addressed the contentious issue of Japan's discharge of treated radioactive water from the Fukushima Daiichi nuclear power plant in September 2024. They agreed to implement long-term international monitoring under the framework of the International Atomic Energy Agency, IAEA, allowing stakeholders, including China, to conduct independent sampling. China indicated that it would consider adjusting its ban on Japanese seafood imports based on scientific evidence obtained through this monitoring. Focusing on the growing tension between Japan and the U.S., Japan's investment in U.S. Treasury securities has consistently declined in recent years, signaling a broader strategic realignment in its financial and economic priorities. Once the largest foreign holder of U.S. debt, Japan's investments in treasuries have steadily fallen due to a mix of domestic economic factors and global financial conditions. In February 2020, Japan's holdings peaked at about $1.29 trillion, the highest in recent times, underscoring its pivotal role as the top foreign investor in U.S. debt. However, by 2021, these holdings began to level off at around $1.25 trillion as global economic conditions changed, especially with the emergence of the COVID-19 pandemic and its effects on financial markets. The downward trend became more noticeable in 2022 when Japan's Treasury holdings decreased to $1.28 trillion by April, the lowest since early 2020. This decline occurred alongside the Bank of Japan's efforts to address domestic economic issues such as deflationary pressures and the need to stabilize the yen against a strengthening US dollar. Increasing yields on Japan's domestic government bonds, JGBs, also made them more appealing, drawing investments away from US Treasuries. By 2023, the decline continued, with holdings falling to approximately $1.18 trillion by year-end. This sustained decrease was driven by Japan's emphasis on diversifying its investment portfolio and reducing risks linked to heavy reliance on US debt. Additionally, higher hedging costs resulting from the Federal Reserve's aggressive interest rate hikes diminished the net returns on US Treasuries for Japanese investors, further discouraging investments in American securities. By November 2024, Japan's holdings had decreased to $1,986 trillion, representing a reduction of approximately $11.2 billion, or about 8.4%, compared to 2013. This recent decline reflects Japan's strategic measures to support its weakening currency, the yen, amidst ongoing appreciation against the US dollar. Japan conducted its largest single-day yen buying intervention in April 2024, selling substantial amounts of US Treasuries to finance the intervention. Rising yields on Japanese government bonds and Japan's broader initiative to realign its international financial strategy have accelerated this trend. This consistent decline highlights Japan's flexible financial strategy, driven by the necessity to balance domestic economic stability with external market forces. The shift also raises concerns about the impact on the US economy, as Japan's sell-off could potentially lower demand for US debt, leading to increased borrowing costs. As Japan continues to diversify its investments and seek closer economic ties with neighboring countries, including China, this evolving strategy indicates a realignment of its role within the global financial system. A major factor driving this shift is Japan's move away from its long-standing ultra-loose monetary policy. The Bank of Japan, BOJ, has indicated greater flexibility in yield curve control and has begun raising interest rates. This policy shift makes Japanese government bonds, JGBs, more attractive to domestic investors. For years, low yields on JGBs encouraged Japanese investors, including major entities like pension funds and insurance companies, to seek higher returns abroad, particularly in US Treasuries. However, as JGBs now offer improved returns, there's a natural shift of assets back to the domestic market. Another key factor influencing Japan's decision is currency market volatility. The Japanese yen significantly weakened against the US dollar throughout 2023 and early 2024. To stabilize the yen, Japan intervened in foreign exchange markets by selling US Treasuries to acquire dollars for intervention purposes. These interventions highlight Japan's commitment to maintaining currency stability and broader economic resilience amid global financial pressures. Japanese institutional investors are increasingly prioritizing portfolio diversification to mitigate risks. Heavy reliance on US debt exposes investors to geopolitical uncertainties, interest rate changes, and potential shifts in US fiscal policy. Consequently, Japan has been exploring investments in European and Asian markets, as well as alternative asset classes such as infrastructure and technology projects. This diversification effort aligns with Japan's broader strategy of reducing dependence on a single economic partner. Japan's diminished interest in US Treasuries could have significant consequences for the US economy. As a major holder of US debt, any sell-off could decrease demand, pushing up US borrowing costs. This is especially concerning given the US government's increasing fiscal deficits. Additionally, large-scale Treasury sell-offs could heighten market volatility, affecting global financial stability. The reduction also highlights the vulnerability of global reliance on US debt. As Japan adjusts its economic strategy, other countries may follow suit, gradually eroding the status of US Treasuries as a global safe haven asset. Broader strategic implications arise as Japan's actions extend beyond economic factors. They are part of a larger strategic realignment of its international relationships. Reducing US Treasury holdings reflects a desire to achieve greater financial independence and decreased dependence on US monetary policy. This realignment coincides with Japan's efforts to strengthen ties with other key partners, including the European Union, ASEAN nations, and even China. Simultaneously, Japan is enhancing diplomatic relations with China. In December 2024, Japanese Foreign Minister Takeshi Iwai visited Beijing and, along with Chinese Foreign Minister Wang Yi, participated in the second meeting of a high-level consultation mechanism on people-to-people and cultural exchanges. This meeting resulted in 10 significant agreements aimed at boosting bilateral cultural and social interactions. Additionally, in November 2024, Japanese Prime Minister Shigeru Ishiba met with Chinese President Xi Jinping during the APEC summit in Lima, Peru. Both leaders expressed a desire to build a constructive and stable relationship, discussing various issues, including trade and regional security. Nippon Steel's attempted acquisition of US Steel was blocked. In December 2023, Nippon Steel, Japan's leading steel manufacturer, announced plans to acquire US Steel for approximately $14.9 billion, aiming to create one of the world's largest steel producers. This acquisition was set to position Nippon Steel as the second-largest steel company globally, enhancing its production capabilities and expanding its market presence. The deal promised to preserve the US Steel brand, maintain its Pittsburgh headquarters, and uphold existing contracts with the United Steelworkers (USW) Union. However, in January 2025, President Joe Biden intervened to block the acquisition, citing national security concerns. The administration emphasized the need to retain domestic control over essential sectors like steel production, which are vital for national defense and infrastructure. This decision followed an assessment by the Committee on Foreign Investment in the United States, CFI-US, which evaluates the security implications of foreign investments. In response, both Nippon Steel and US Steel filed lawsuits against the Biden administration, arguing that the decision was politically motivated and lacked a proper legal basis. The companies claimed that the blockage violated constitutional due process rights and statutory procedural requirements. They also accused local competitors and labor unions of engaging in anti-competitive actions to prevent the takeover. The Japanese government expressed difficulty understanding the ruling, viewing it as a potential source of tension in economic relations between the two nations. Japan's industry minister described the decision as incomprehensible, raising concerns about future investments and the broader implications for US-Japan economic partnerships. These events highlight the complex nature of US-Japan economic interactions. Japan's reduction in US Treasury holdings reflects broader market and policy trends, while the blocked acquisition underscores the US government's focus on national security and foreign investment matters. Both scenarios warrant close monitoring due to their significant effects on the economic and diplomatic relations between these long-standing allies. The evolution of Japan-US relations over time reveals a multifaceted relationship shaped by forced contact, cultural exchange, conflict, economic rivalry, and a lasting alliance. Since the mid-19th century, their interactions have significantly influenced domestic development and global impact. Modern relations began in 1853 with Commodore Perry's mission, ending Japan's isolationist Sakoku policy. The 1854 Convention of Kanagawa opened Japanese ports, establishing diplomatic and trade ties. The US introduced technologies like steamships and modern weaponry, fueling Japan's industrialization during the Meiji Restoration. Japan also drew from Western knowledge to reform its governance and economy. During the Meiji period, American missionaries and engineers contributed to Japan's educational and industrial development. However, Japan's modernization and regional ambitions clashed with US interests, particularly in Asia. Agreements like the 1905 Taft-Katsura Agreement sought to manage these tensions by defining spheres of influence. Japan's territorial expansion in Manchuria and China during the 1930s strained relations, leading to US sanctions. The breakdown in diplomacy culminated in Japan's attack on Pearl Harbor in 1941, bringing the US into World War II. The war ended with Japan's defeat and the atomic bombings of Hiroshima and Nagasaki, which killed over 200,000 people and reshaped global power dynamics. From 1945 to 1952, the US led Japan's occupation, implementing reforms that transformed the country politically, socially, and economically. The new constitution promoted democracy and renounced war, while land and industrial reforms reduced economic inequality. By 1952, Japan regained sovereignty through the Treaty of San Francisco, emerging as a peace-oriented state. The US-Japan Security Treaty of 1951 established Japan as a key ally in countering Soviet influence in Asia. US military bases in Japan allowed the country to focus on economic recovery. This period saw Japan's economic miracle, driven by strong exports and US market access. By the 1970s, Japan had become the world's second-largest economy, leading to significant trade imbalances with the US. American policymakers pushed Japan for market reforms and currency adjustments, culminating in the 1985 Plaza Accord. While temporarily reducing trade tensions, the accord contributed to Japan's asset bubble, followed by the lost decade of economic stagnation. In recent decades, US-Japan relations have deepened across security, economic, and technological domains. Defense cooperation includes around 50,000 US troops stationed in Japan, with joint military exercises enhancing regional security. Bilateral trade exceeds $200 billion annually, while Japanese foreign direct investment in the US supports hundreds of thousands of jobs. Partnerships in areas like AI, space exploration, and renewable energy drive innovation, with NASA and JAXA working on joint missions. As members of the Quad, the US and Japan promote a free Indo-Pacific, address North Korea's nuclear threat, and collaborate on disaster relief and infrastructure projects. Japan's reduction in US Treasury holdings, though gradual, signifies a strategy to diversify its financial portfolio and decrease dependence on the United States. This approach is driven by domestic monetary policy adjustments, efforts to stabilize the currency, and the need to mitigate risks associated with heavy exposure to US debt. For Japan, this diversification indicates a realignment of its global economic engagement, including strengthening relationships with regions like the European Union and Southeast Asia. At the same time, the blocked $4.9 billion acquisition of US steel by Nippon Steel complicates the bilateral relationship. The Biden administration's decision to prioritize national security over economic cooperation, along with lawsuits from Nippon Steel and US Steel, has diminished trust between the two nations. Japan perceives the move as politically motivated, overlooking mutual economic interests and raising concerns about the long-term reliability of the US as a business and trade partner. The return of the Trump administration introduces significant uncertainty into the evolving US-Japan relationship. President Trump's well-documented protectionist economic policies and America First rhetoric have previously targeted Japan for its trade surpluses with the United States and accusations of currency manipulation. Should these views persist, They are likely to heighten friction in key areas, including trade agreements, defense contributions, and foreign investment regulations. Trump's history of prioritizing bilateral trade imbalances over multilateral cooperation suggests a shift toward a more transactional dynamic in US-Japan relations, with increased demands for concessions from Japan in both economic and security matters. Such an approach could prompt Japan to accelerate its efforts to diversify its global alliances, reducing dependence on the United States by strengthening ties with regional neighbors and other major powers. Japan has already indicated an intent to build deeper partnerships with India, Australia, and members of the European Union. Its growing engagement with China highlights a pragmatic shift in strategy. Despite historic tensions with Beijing, Japan recognizes the economic and strategic necessity of closer ties with its largest trading partner. Recent initiatives, including joint economic forums and discussions on regional stability, underscore Japan's willingness to explore new avenues for collaboration with China, albeit cautiously. Additionally, frameworks like the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, provide Japan with a platform to expand its trade network and reduce reliance on the US-dominated global order. Japan's leadership within the CPTPP and its active pursuit of economic agreements with Southeast Asian nations align with a broader effort to hedge against potential volatility in US policy. If Trump's administration resumes with a confrontational stance, Japan may further pivot towards cultivating these alternative alliances. This shift could reshape the geopolitical landscape in Asia, potentially fostering a more multipolar environment where Japan plays a central role in balancing competing interests. The stakes in this realignment are significant. While shared values and deep economic ties continue to anchor the US-Japan alliance, diverging strategies and mounting challenges risk undermining the partnership. As both nations navigate these complexities, the future of their relationship will depend on their ability to reconcile domestic priorities with a shared commitment to regional stability and global prosperity. For now, uncertainty looms, and Japan's strategic realignment with neighbors like China adds another layer of complexity to an already delicate equation. That's all for this video. Thank you for watching.